What's up everybody, Gen X Dividend Investor here. In this intriguing video I tell you why my favorite dividend bank stock is Starbucks, something that I think will surprise most of you. I'll also share a true story about a simple grain mill worker who lived in a mobile home park and invested his way to becoming a multi-millionaire, so I recommend you watch this entire video. But before I kick things off, I want to say that I hope that everyone had a great Thanksgiving or at least a great week. I'm very grateful that you all take time to watch my videos, and I'm grateful for my friends and family and for the financial freedom that dividends have given to me. I'm grateful that I started investing and kept investing even when times were tough, and now I've gotten to the point where my dividend portfolio pays for my mortgage and my family's healthcare and food and pretty much everything, including occasional trips to Starbucks. Now, my longer time viewers know that I own 28 dividend tickers, and Starbucks is one of my smaller positions at about 33K of my portfolio, but it's still one I love. I've been a big fan of going to Starbucks since before my kids were born, and even though it can be spendy, it's been a fun treat for me and my family. I was one of those people who used to stop by Starbucks every day on my commute to work, and then every weekend I'd take my family there, to the point that I knew many of the baristas on a first-name basis. These days in retirement I tend to use my Nespresso more than anything else, but it's still fun to go to Starbucks every so often. Starbucks also happens to be one of my favorite YouTubers' largest positions these days, and I'm talking about the OG dividend investor on YouTube, which is PPC Ian. There's actually another OG dividend YouTuber I'm aware of named Dr. Dividend, who actually posted his first dividend video like a month before PPC Ian's first one back in 2016. Anyway, back to Starbucks. And did you know that this original Starbucks logo was designed with this topless siren on it? It was also enclosed in a circular ring with the text Starbucks Coffee, Tea and Spices, highlighting the main products sold at the company's first coffee shop, and the logo was brown because coffee is brown. After Howard Schultz took over the company in '87, the Starbucks logo evolved, taking us to today's green and white version, representing freshness, opportunity, and growth. And growth is a big reason why people love investing in Starbucks. Check out this total returns chart I pulled on Seeking Alpha, comparing Starbucks in orange to the SP 500 in blue over the last 2 decades. What we see is that Starbucks has blown the SP 500 out of the water over that time frame, delivering a 3x return. That being said, I don't calculate that Starbucks is cheap right now. And for reference, today's Starbucks yield is only about 2.16%, but it has a 10.35% 5-year dividend CAGR, a nice 61% payout ratio, and they've raised their dividend for 13 consecutive years. So why do I think that Starbucks is such a brilliant bank dividend stock? Well, the reality is that sometimes what a company does on its surface doesn't really explain its overall value. Like most people think of McDonald's as a fast food and drink company, only us investors know that it's ultimately a real estate play. But unlike McDonald's, which franchises, Starbucks doesn't really do that, which means its locations are mostly corporate owned. The reason that Starbucks avoids franchising is that Schultz wanted to maintain a high level of control over its locations to ensure they maintain the culture he wanted, though lately they've been granting lots of licenses for operating Starbucks within hospitals, colleges, and some businesses, which are different from franchises. So whereas McDonald's is a real estate play, what's the banking angle with Starbucks? Well, this screenshot will start painting the picture for what I'm talking about. I took this on my Starbucks app a few minutes ago, and it's of my black Starbucks loyalty gift card I got years ago and which has about 15 bucks loaded on it. It shows that I've got 245 loyalty star points, which can be used for getting free drinks and other things. I've blacked out my name on top and my QR code on the bottom, and baristas scan that QR code when I'm at a Starbucks and have pre-ordered something or I'm simply paying for my stuff. I like using my Starbucks app to order and pay for Starbucks stuff because it lets me pre-order what I want before I get there, and then I could even skip the line and just go pick up my order that's waiting for me on the counter, not to mention I also get more loyalty points. Starbucks has a bunch of gift cards you can digitally add via your app, or you can get online at places like Amazon, or in person at checkout counters in stores. Like right now they have some holiday Starbucks cards, and you can buy one for 20 bucks or whatever and add it to your app, and then its picture will show up along with however much cash is on it. The physical gift cards are nice stocking stuffers and are simple thank you gifts I used to give coworkers. And here's another gift card I have in my app, and it's a Starbucks Gold card that I've used all the cash out of, so I can either reload it or just not use it for now. Starbucks has other ways to accrue stars, such as by playing fun little games on the app or via promotional offers, like this one for tomorrow where it says November 21st is a triple star day, where you can get more points faster. I remember last Christmas my whole family sat around in our PJs after opening gifts, and we tried to beat the high score that one of my kids got on the Starbucks holiday game they released. Anyway, you can move cash from one Starbucks card to another, and whenever I see that my cash on my card is running low, I just press a button and add some money to it. Now, when you join Starbucks loyalty program to use their cards, these terms and conditions help explain why they're my favorite bank stock. And hang with me because it's important you understand this. It says, we issue the Starbucks card to you. It allows you to load a dollar value onto your Starbucks card for use at participating Starbucks stores. The dollar value that you load onto your Starbucks card is a prepayment for the goods and services of participating stores. We offer the Starbucks card to make it easier for you to shop with us and to make your relationship with us more rewarding. Unless otherwise required by law or permitted by this agreement, the dollar value on your Starbucks card is non-refundable and may not be redeemed for cash. The value on your Starbucks card is not insured by the FDIC, nor does it earn interest. So that contains a bunch of information that you might otherwise gloss over. The key points are that you're storing cash at Starbucks so you can buy some of their products in the future. But you don't get interest for leaving your cash there, and you can't use your Starbucks card as a Visa or anything. No, it's just a pile of cash accruing in the Starbucks coffers that you'll use to buy their stuff. Think about how amazing that is for Starbucks. I mean, there are around 35,000 Starbucks locations around the world, and people all over are depositing money into their accounts, prepaying for stuff they intend to buy from Starbucks, and all that money they transfer onto their cards ultimately sits in Starbucks HQ. Now, I've never hooked my debit card up to their app, so I've not tried taking cash back off the card, but regardless, they're like a bank that holds your cash but doesn't pay you interest. I looked at Starbucks' latest earnings report, and they mentioned that their rewards loyalty program's 90-day active members in the US increased up to 32.6 million members, up 14% year over year, telling me that even more people are using their app and driving cash into Starbucks. In fact, I saw this article from 2022 that said that more than half of Starbucks sales now come from loyalty members like me. If you look at their most recent financial statement, and specifically their liability section, you can note a line that says stored value card liability and current portion of deferred revenue of $1.7 billion as of October 1st, 2023 versus $1.64 billion in 2022. So that means they've got $1.7 billion of cash deposited into their account, an amount that has only been increasing over time. And I found this article from 2016 talking about how Starbucks' loyalty program now holds more cash than many banks, and at that time Starbucks had $1.2 billion in cash. That means their loyalty program cash pile has grown by $500 million in 7 years. Thus, while Starbucks is not really a bank, it still has a bank-like aspect of storing your cash in it, but it's better than a bank as it isn't paying any interest, and they know that all that cash will eventually be used for purchasing Starbucks products, which means people like me are effectively providing Starbucks with a $1.7 billion loan at 0% interest. Going back to their latest earnings report, they also talk about how their revenues continue to trend up, EPS increased significantly year over year, margins are increasing, same-store sales are increasing, etc. And beyond all that, another reason they're better than a normal bank is because Starbucks also earns profit from something called Breakage, which is the amount that is unused from gift cards every year. Like in 2021, they noted they had $160 million of breakage. Now, I've not heard if Starbucks has a plan to invest that cash or do something with it, but it'll be interesting to see where they take things. Now, you might be watching this and thinking, come on, that's not really a bank, but then I'd point you to this article from a few years ago talking about a growing number of South Korean banking groups that are alarmed at what Starbucks is doing, describing the US coffeehouse chain as a potential rival that could threaten their survival in the financial market. The Korean banking groups fear that Starbucks may stir up the conventional financial market based on the significant amounts of cash customers load onto its prepaid gift cards, cards that have yet to be subject to financial regulations. The Korean chairman of Hana Financial Group expressed his concerns by saying that technologies have allowed companies like Starbucks to be our rivals. And he said that Starbucks is basically an unregulated bank, not a mere coffee company. Some other Korean banking leaders expressed their concern, saying that the most used mobile payment app in the US was the Starbucks app, not Google or Apple Pay. They continued on saying about 40% of its payments were made with the app, and the amount of cash loaded onto its prepaid cards and apps surpassed the amount of cash that some provincial banks had. Another Korean bank official said, Starbucks has been regarded as a fintech firm, not a coffee company, over the past few years. And then an economics professor at Hamsung University in South Korea suggested that Starbucks and any other service providers like it needed to be regulated. So take all that for what you will. Now, a big question you should have is if Starbucks can continue to grow. I mean, the past has been awesome, but what people really care about is what's going to happen in the future. Starbucks knows investors expect them to continue to outperform, and a year ago they unveiled a multi-year reinvention plan to enable ongoing growth, with a goal to deliver 7 to 9% annual comparable store sales growth, 10 to 20% revenue growth, and 15 to 20% EPS growth. They have plans to continue to add more locations, improve efficiency at stores, continue to incentivize more adoption of the loyalty program, and introduce new products, etc. They also said they expect to return $20 billion to shareholders over the next 3 years from dividends and buybacks. Starbucks also expects to continue robust store development in China, with net unit growth of approximately 13% annually. And globally, Starbucks expects to approach 45,000 stores by the end of 2025, and then plans to have about 55,000 stores by 2030, as projected at its investor day. And their plans expect solid margin expansion from 2023 through 2025. Now, one hurdle Starbucks is facing is that some stores are unionizing. So Starbucks is trying to improve things for their workers, like helping them get better working hours, and they're expanding digital tipping, and they're doing some other things to give folks better opportunities for more pay. They're also offering enhanced sick pay, as well as have plans for new savings and student loan benefits, along with providing additional mental health benefits. They're also adding new career path options for some employees, and are offering training options, amongst other things. Starbucks is also doing a slew of improvements meant to make the customer experience better, from improving the design of their locations to introducing innovations to decrease how long some drinks take to make, and they're offering some higher quality drinks as well. Additionally, Starbucks is expanding their relationship with Uber Eats and DoorDash to enable more deliveries, which will be another source of revenue growth. They're also taking steps to make more inroads into people who drink coffee at home, doing things like partnering with Nespresso to launch Starbucks Reserve Pods, something I'll try out in my home machine. So bottom line, Starbucks' new CEO, Laxman Narasimhan, has started delivering for investors as hoped. Time will tell if he can continue to deliver, but my money is betting he can. Now, to be fair, I also own Goldman Sachs and TD Bank as solid dividend bank stocks, and I also like JP Morgan Chase and most of the Canadian banks. But Starbucks is in its own unique class of investments I really love. Please leave me a comment telling me if you own Starbucks, or if you plan to own any in the future, or if not, why not? Oh, and leave me a comment telling me what your favorite order is at Starbucks. Mine is a double tall caramel latte with half the caramel, and sometimes I'll ice it if I want a cold drink. And I'll sometimes get a sausage or bacon sandwich. Okay, now let's switch gears and I'll tell you about an incredible true story about a grain mill worker named Jeffrey Holt, who lived in a mobile home park and managed to invest his way to becoming a multi-millionaire. His story came out this week after he died at age 82, and the town in New Hampshire that he lived in was surprised to find that the resident had built a portfolio worth $3.8 million that he had left to him, with the goal of benefiting his community in the areas of education, health, recreation, and culture. And this is the trailer Jeffrey lived in, and he also acted as a caretaker for other mobile homes. His trailer was mostly empty of furniture, and he didn't even have a TV or a computer, and the furniture he did have was old and falling apart. Jeffrey was often seen wearing simple clothes and loved riding his lawnmower to get around town. He collected hundreds of model cars and train sets that filled his room, covered his couch, and extended into his shed. Earlier in life, Jeffrey worked as a production manager at a grain mill, and later he taught driver's ed to high school students, though he preferred riding his bike and his lawnmower more than anything else. He had dyslexia and could barely read or write or spell, and he probably felt like a disappointment to his father, who was a professor. He was briefly married, but he always lived frugally, something he learned from his upbringing, where his parents kept the thermostat low to save money. His father taught him that investing was important, and Jeffrey listened. And while Jeffrey lived a simple life, he said he had everything he ever wanted, and so he had no reason to complain. The reality, and this might be hard for some people to understand, is that Jeffrey simply didn't want more. I actually do understand that, as the older I get, the more I realize I have everything I want or need. I mean, I still enjoy seeing my income trend up, and I get a dopamine hit whenever my company announces a dividend hike, but I'm also content where I am and I don't need more. My family still wants more, so that influences what I do, but I'm happy where I am in life, and a lot of that happiness and lack of feeling the need for more came from my experiences after my health issues, which helped me open my eyes to how lucky I am for what I do have. Anyway, Jeffrey didn't talk about money much, though he would often ask his friends and family often if they needed anything, though they always said no, thinking he didn't have anything himself. His best friend knew Jeffrey invested in the stock market, and he often saw him sitting near the river where he'd go to study financial publications. But no one had any idea that Jeffrey had grown his portfolio to be worth millions of dollars. It even surprised Jeffrey that it had gotten that large. He confided in his best friend that his investments were doing better than he'd ever expected and wasn't sure what he'd do with the money, and his friend suggested helping out the town, so Jeffrey left the town with the entire $3.8 million portfolio. The town leaders have apparently decided not to touch the principal and instead just use the $150,000 it yields each year. One of Jeffrey's first investments was in a communications mutual fund before cell phones even existed, but I'm not sure what specific tickers he owned. Now, I know that some of you are probably sitting there and asking yourself, why did he even bother? I mean, why invest if you're not going to benefit yourself? My response is that it's understandable to feel that way, but I can also appreciate someone simply enjoying the journey they're on, with that being a reward in itself, without needing to collect a big prize at the end. Jeffrey had what he wanted and he didn't want to spend his millions of dollars to become happier, and the act of investing itself was rewarding enough. I personally plan to leave my kids our dividend portfolio, and I get great enjoyment knowing that they'll have an easier and more secure financial life than I did. I've enjoyed investing over the last 3 decades, and it's only in the last few years that I actually started using the returns of my investments. Part of the reason I love making videos like this is to share the simple secret that if you consistently invest in non-crappy stuff for a long period of time, you'll most likely do better than you can imagine. By non-crappy, I'm talking about things like Starbucks and Pepsi and Microsoft and stuff like that, all 3 of which I'm long in. Take a listen to Kevin Simpson of Devo fame, who recently was talking about investing in the markets and how important solid dividend stocks are.
So I think if you've owned Pepsi for the past 10 years, I'm not 100% on this, but it's probably like a 9% annualized total return when you factor in the dividend.
Yeah.
Because we looked at a chart earlier, it was 8.6% on the S&P since 1981. Since 1926, it's 10.2. And I think the most important statistic in there that we never really talk about is that of that return. So if you go back to 1926, almost 100 years, 10.2% return on the S&P 500 is awesome. 39% of that return is dividends and distributions reinvested.
Wow.
That's why you're in stocks. And since the 87 crash, which is more our contemporary time period, it's 50%.
Wow.
And that's S&P Dow data. You can look at it anywhere. It's not
the traders aren't getting that. The investors
No, it's the investor. But that's how you have true wealth creation.
Yeah.
So Kevin helps run the Amplify CWP Enhanced Dividend Income ETF, ticker DEVO, something I'm long in, and I really like his perspective as a dividend investor, and I like outsourcing him to run covered calls for me. The key point is that good dividend stocks are a material part of your returns, and if you can just keep investing in decent stuff for a long time, you'll no doubt do quite well. And with that, I'd like to close things off, so if you appreciated this video, then please show me your support by hitting that thumbs up button, subscribing if you haven't yet, and clicking that bell notification. Also, I'd like to announce that Seeking Alpha has a 2-week Black Friday sale that started on November 20th that offers a 30% discount off the Seeking Alpha premium service for new user signups using my affiliate link in the description of this video. I'm now sponsored by Seeking Alpha, but I was already paying for their premium service because I valued their stock articles and associated comments so much, to the point that I'd literally never buy or sell a stock without first seeing what Seeking Alpha had on it. Finally, I highly recommend that you join my free Dividend Discord chat server, which has over 11,000 Dividend investors on it from 76 countries around the world. Thanks for watching, stay positive, and I'll talk to you again real soon. Remember, I'm not a financial advisor, and my videos are for entertainment and inspirational purposes only. Investing of any kind involves risk. I'm only sharing my opinions with no guarantee of gains or losses on investments.